Blockchain technology has become one of the most transformative innovations of the 21st century, fundamentally changing the way we think about transactions, trust, and security in the digital world. From its origins as the underlying technology of Bitcoin, blockchain has evolved into a tool with applications across a variety of industries, from finance and healthcare to supply chain management and even voting systems. This comprehensive discussion will explore blockchain technology in depth, covering its origins, how it works, its applications, advantages, challenges, and its future potential. The origins of blockchain technology. Blockchain technology was introduced in 2008 by an individual or group of individuals using the pseudonym Satoshi Nakamoto. It was originally developed as the foundation for Bitcoin, the first cryptocurrency. The aim was to create a decentralized system of digital cash that could operate without the need for intermediaries like banks or governments. This system will allow people to send and receive payments across the internet securely and anonymously, without relying on traditional financial institutions. While Bitcoin was the first use case of blockchain technology, the technology itself has much broader implications. Over time, blockchain has been adopted for a wide range of applications beyond cryptocurrency, due to its ability to provide secure, transparent, and tamper-proof records. How blockchain works. At its core, blockchain is a distributed ledger technology, DLT. This means that instead of having a single central authority, like a bank or a government, maintaining the records, the responsibility is distributed across a network of computers, known as nodes. These nodes work together to validate transactions and maintain the integrity of the system. Blockchain consists of a chain of blocks, with each block containing a set of transactions. These blocks are linked together in chronological order, forming a continuous, immutable chain of data. Here's a breakdown of how blockchain works. Decentralization. Traditional databases, such as those used by banks, are centralized, meaning all the data is stored in one location. Blockchain, however, is decentralized. Each node in the network has a copy of the blockchain, and all nodes work together to validate transactions. This ensures that no single entity has control over the entire system, making it resistant to tampering and fraud. Immutability. Once a block of data is added to the blockchain, it cannot be altered. This immutability is a key feature of blockchain that provides security and transparency. To change a transaction on the blockchain, a hacker would need to alter not only the block containing the transaction, but also all subsequent blocks, which is practically impossible in large, well-established networks like Bitcoin or Ethereum. Consensus mechanisms. Blockchain networks use consensus mechanisms to ensure that all nodes agree on the state of the blockchain. The most well-known consensus mechanism is proof of work, POW, which is used by Bitcoin. In POW, nodes, called miners, compete to solve complex mathematical puzzles. And the first node to solve the puzzle gets to add the next block to the chain and is rewarded with cryptocurrency. Other consensus mechanisms include proof of stake, POS, which is more energy efficient and is used by newer blockchain networks like Ethereum 2.0. Cryptographic security. Blockchain uses advanced cryptography to secure transactions and ensure data integrity. Each block contains a cryptographic hash of the previous block, creating a chain that is virtually impossible to alter. Additionally, digital signatures are used to authenticate transactions and ensure that only the rightful owner of an asset can transfer it. Applications of blockchain technology. While blockchain was originally developed for cryptocurrencies like Bitcoin, its potential uses extend far beyond digital currency. Some of the most promising applications of blockchain technology include finance and banking. Blockchain technology has the potential to revolutionize the financial industry by reducing the need for intermediaries, increasing transparency, and improving security. For example, blockchain can facilitate faster and cheaper cross-border payments by eliminating the need for banks to rely on correspondent banking networks. Decentralized finance. DeFi is another area where blockchain is making waves, allowing users to access financial services like lending, borrowing, and trading without the need for traditional banks. Supply chain management. One of the key challenges in supply chain management is ensuring the authenticity and traceability of goods. Blockchain can address this by providing an immutable record of a product's journey from manufacturer to consumer. Companies like Walmart and IBM are already using blockchain to track the movement of goods through their supply chains. improving transparency and reducing the risk of fraud. Healthcare. In the healthcare industry, blockchain can be used to securely store and share patient records. By using blockchain, healthcare providers can ensure that patient data is tamper-proof, easily accessible, and can only be shared with authorized parties. This can improve patient outcomes by allowing doctors and specialists to access a complete, accurate medical history in real time. Additionally, blockchain can be used to track the provenance of pharmaceuticals, ensuring that counterfeit drugs don't enter the market. Voting systems. One of the most exciting potential applications of blockchain is in the realm of voting. Traditional voting systems are often vulnerable to fraud, tampering, and human error. Blockchain offers a way to create secure, transparent, and tamper-proof voting systems. In a blockchain-based voting system, each vote would be recorded on the blockchain, ensuring that it cannot be altered or deleted. This could significantly reduce the risk of election fraud and increase voter confidence in the electoral process. Intellectual property and digital rights management. Blockchain can also be used to manage intellectual property and digital rights. Artists, musicians, and content creators can use blockchain to track the ownership and distribution of their work, ensuring that they are fairly compensated for their creations. Platforms like Audius and Royal are already using blockchain to give musicians more control over their music and royalties. Smart contracts. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. These contracts automatically execute when the conditions are met, eliminating the need for intermediaries like lawyers or notaries. Smart contracts are most commonly associated with the Ethereum blockchain and have applications in areas like real estate, insurance, and financial services. Identity management. Blockchain can be used to create secure, tamper-proof digital identities. With a blockchain-based identity system, individuals would have control over their personal data and could choose which information to share with different service providers. This can reduce identity theft and fraud, as well as streamline processes like applying for loans or opening bank accounts. Advantages of blockchain technology. Blockchain technology offers numerous advantages, which have contributed to its growing popularity and adoption. Decentralization. The lack of a central authority means that no single entity has control over the system, making it more resistant to censorship, fraud, and manipulation. Transparency. All transactions on a public blockchain are visible to all participants in the network, providing a high level of transparency. This can be particularly useful in industries like supply chain management, where it is important to ensure the authenticity of products. Security. Blockchain uses cryptography to secure transactions, making it highly resistant to hacking and fraud. The immutability of the blockchain also ensures that once data is recorded, it cannot be altered. Reduced costs. By eliminating intermediaries like banks, lawyers, and notaries, blockchain can significantly reduce the cost of transactions. This is particularly beneficial in areas like cross-border payments, where traditional systems are slow and expensive. Efficiency. Blockchain can streamline processes and reduce the need for manual record-keeping. For example, smart contracts can automate the execution of agreements, reducing the time and effort required to enforce contracts. Challenges and limitations of blockchain. Despite its many advantages, blockchain technology also faces several challenges and limitations. Scalability. One of the biggest challenges facing blockchain is scalability. Most blockchain networks, including Bitcoin and Ethereum, can only process a limited number of transactions per second. This can lead to delays and high transaction fees during times of high demand. Various solutions, such as the Lightning Network and sharding, are being developed to address this issue, but scalability remains a major concern. Energy consumption. Blockchain networks that use proof of work, such as Bitcoin, require large amounts of computational power to secure the network. This has led to concerns about the environmental impact of blockchain technology, as mining requires vast amounts of electricity. Newer consensus mechanisms, like proof of stake, are more energy efficient, but the energy consumption of blockchain remains a contentious issue. Blockchain technology has the potential to revolutionize a wide range of industries by providing secure, transparent, and decentralized solutions for transactions and data management. While challenges like scalability, energy consumption, and regulatory uncertainty remain, ongoing innovation and development are likely to address these issues. As blockchain continues to evolve, its impact on the digital economy and society as a whole will only grow. making it one of the most exciting and transformative technologies of our time.